Alright guys, we have a very interesting news right here where it says technical analyst presents triple bottom roadmap to $9, $15 and $31. Now, what if the quiet consolidation we are witnessing right now isn't a sign of weakness, but rather the construction of a massive financial launch pad? While short-term traders panic over every tiny price fluctuation this July 2026, long-term chartists are stepping back to look at the macro picture. Popular analyst Egrag Crypto recently shared a market update on X that outlines a high-conviction roadmap for XRP. This isn't about guesswork or hype. It is a structured technical framework pointing to targets of $9.28, $15.35, and eventually $31.65. So in this video, we are going to dive deep into this triple bottom structure, examine the moving averages supporting it, and break down what it really means for the future of the market. So let's start with our very first question about what is the triple bottom formation on the XRP macro chart. So to understand where XRP might be headed, we first need to look at the macro structural pattern that Egrag Crypto highlighted right here. Across multiple market cycles, XRP has been developing a classic triple bottom formation. The first two bottoms have already been firmly established in previous years, establishing a solid floor for the asset. Right now, the market is actively forming the third and final bottom of this long-term pattern. This third bottom is currently taking shape in the critical accumulation zone between 0.90 and $1. This price corridor isn't just an arbitrary number on the screen. It represents a historical area of immense demand where buyers consistently step in to absorb supply. Now, in my personal opinion, seeing a triple bottom pattern form on a multi-year chart is one of the most reassuring signs for patient investors. While retail traders often get shaken out by short-term volatility, large institutional players quietly build their positions inside this multi-year basis. When an asset hits the same structural floor 3 separate times over several years and refuses to break lower, it shows that underlying market floor is rock solid. It's like building a skyscraper. The deeper and stronger the concrete foundations are, the higher the building can safely rise. Now, why are the moving averages acting as a foundational pillars? The triple bottom pattern isn't standing alone in a vacuum. What makes Egrag Crypto charts update particularly compelling is how the current price structure aligns with these three major exponential moving averages, or EMAs, right here. These technical indicators act as a foundational pillars that reinforce the structural integrity of the chart. First, we have here the 21 EMA, which acts as the primary gauge for macro momentum. When price action stays healthy around this line, it signals that long-term momentum is quietly building. Right? Here on our chart, that's the yellow line, or the yellow average, moving average right here. Now, the second is the 77 EMA, which is represented by the white line. And this represents major cycle support, acting as a sturdy safety. It is acting as a sturdy safety net during broader market pullbacks. And finally, we have the 111 EMA, which is represented by the blue line. Right? This serves as the deep macro bottom support, defining the absolute floor of the entire multi-year trend. Now, in my opinion, the convergence of the 21 EMA, 77 EMA, and 111 EMA right inside the 0.90 to $1 support zone is the real engine behind this setup. Think of it like a three-layer security system protecting the price floor. When multiple moving averages align perfectly with a major horizontal support level, it creates a powerful magnetic force that draws in long-term capital. It gives buyers the confidence that the downside risk is well defined, while the upside potential remains wide open. Now, what key price levels must XRP reclaim to trigger a massive rally? While the triple bottom structure is developing nicely in the 0.90 to $1 zone, Egrag Crypto emphasized here that this pattern requires full confirmation before the macro rally can truly unleash its power. The path to higher price target isn't an instant vertical line. It follows a step-by-step staircase of key reclamation levels. So first milestone in this roadmap is a reclaim of $1.23. Crossing above the $1.23 signals that the bulls are officially taking back control of short-term momentum. Now, the second milestone is structural confirmation at $1.56, which validates the third bottom is complete. Once $1.56 is secured, XRP enters the major breakout zone between $2.38 to $3.54. Breaking through this historical resistance band is the ultimate trigger that unlocks macro price expansion. So in my personal opinion, watching these specific price gates is crucial for managing expectations. Many investors expect an asset to shoot straight to the moon overnight, but real market cycles move like a row of falling dominoes. $1.23 is the first domino. Once that falls, it knocks down $1.56, which then knocks down the $2.38 to $3.54 barrier. By monitoring these exact numerical steps, we can track the strength of the trend in real time rather than relying on pure speculation. Now, how realistic are the multi-digit Fibonacci targets of $9, $15, and $31? Once XRP successfully clears the major breakout zone between $2.38 and $3.54, Egrag Crypto's analysis projects three distinct price targets using Fibonacci extension levels. These extensions provide an objective blueprint for where the price could travel during a macro expansion phase. So, the first major Fibonacci target sits at $9.28, which corresponds to the 1.272 extension level and represents a roughly 9x return from the macro accumulation zone. The second target is at $15.35 at the 1.414 extension level, and that's yielding a potential 15 times return. The ultimate macro destination on this chart is the $31.65 at the 1.618 Fibonacci extension, which would deliver a massive 30 times return from the $1 region. Now, here's my opinion. While a price tag like $3.65 might sound unbelievable to casual onlookers, Fibonacci extension math has repeatedly proven its accuracy across previous crypto bull cycles. When an asset breaks out from a multi-year consolidation base, the resulting expansion phase often surprises everyone with its speed and magnitude. A target of $9.28 or $15.35 is entirely logical when you consider the total capital growth of the broader digital asset ecosystem during a full macro cycle. It's not about emotional promises. It's simply what the mathematical geometry of the chart suggests. Now, how should investors navigate this macro roadmap? It is essential to remember Egrag Crypto's own words right here, where charts do not predict the future with absolute certainty. Instead, they provide a disciplined, probability-based framework to help us make sense of market scenarios and manage risk effectively. Accumulating near the macro EMA support region between 0.90 and $1 provides an exceptionally favorable risk to reward ratio. By establishing exposure near the macro floor, an investor positions themselves for potential returns of 9 times, 15 times, or even 30 times if the pattern plays out fully, while keeping downside risk tightly capped at the structural support levels. Now, here's my opinion. The biggest mistake most retail participants make is chasing green candles after an asset has already pumped 500%. The true wealth in crypto markets is generated by identifying asymmetric setups before the breakout happens. Egrag Crypto's macro chart gives us a clear strategy. We'll respect the support levels at 0.90, watch for the confirmation at $1.23 and $1.56, and stay patient while the larger structural pattern develops. And finally, here is our overall conclusion. Egrag Crypto's macro analysis provides a clear and methodological framework for understanding XRP's long-term trajectory. The combination of developing triple bottom formation, strong alignment across the 21 EMA, 77 EMA, and 111 EMA, and well-defined resistance targets gives market participants a clear roadmap to follow. While the journey requires reclaiming key milestones at $1.23, $1.56, and the crucial $2.38 to $3.54 breakout band, the potential Fibonacci extension targets of $9.28, $15.35, and $31.65 showcase the sheer scale of opportunity if this macro structure completes as expected. So by staying grounded in data, understanding technical confirmations, and maintaining a disciplined approach, investors can navigate the market with clarity and confidence. Alright, and this finally ends our video. Thank you very much for watching, and see you on the next one, or you might just as well check this next recommended video right here.